Okay, in this session we are going to look at a question and we're going to work through question 4. This question was part of the 2020 exam and was one of the questions that students had to complete. Now this question included both your cash as well as your credit journal. So let's quickly go to the bottom and see what is required from us. Okay, so required, use the relevant transactions above to complete the following journals and general ledger accounts. So they want us to complete the following journals as well as general ledgers. They tell you document numbers are not required, so those columns will be left blank. And round to the nearest rand. So you round off to the closest decimal. So what journals are you required to do? The first one was your debtors journal. And then only the sales and cost of sales columns needs to be totaled. So we do not have to total anything else, only those two columns. So total only sales and cost of sales. Then we've got the debtors allowance journal. And only the sales and cost of sales needs to be total for that as well. Now, the fact that we only have to total that already indicates that those are the two general ledger accounts that they will require us to complete at the end of the question. Okay, now remember we said the totals is the amounts that we transfer to our general ledger account. Then the following thing is they asked us the cash book receipts. To complete that, and only the sales and cost of sales columns need to be totaled. Analysis of receipt column is not required, so we do not have to do that column. And remember, they deposit monies received on the same day, so that means all monies are received on the same day, which means the analysis of receipt in the bank column would be exactly the same. That's why they do not ask for analysis of receipt account. In question 4, the sales account, which has an opening balance of 242,340, they want you to balance the account and settlement discounts amounting to 2,870, including VAT, has been granted. So we still need to take that into account as well. And then your cost of sales has an opening balance of 152,000. And no balancing of this account is required. So we only have to complete it, we do not have to balance it. We only have to balance the sales account. Okay, so this is what is required from us. Okay, let's go read the information they've provided and see what information have they given to us. Okay, so they told us Hollow Oaks. Hollow Oaks dealer is run by Harry Hollow, a sole trader. Hollow Oaks Dealers is a general dealer who uses the perpetual inventory system. If we see perpetual inventory system, a little red flag needs to go off, and you need to know that you have to take it to inventory when you capture it. They tell you a constant markup of 20% on the cost price is used. Okay, so what that means is when we work out the cost price, if it is on cost price, our cost price will represent 100%. Our markup percentage will be the 20%, and our sales percentage would be the 120. Okay, so it's very important that you realize what the difference is between a markup on cost and a markup on the sales price. Okay. Then they tell you the business is registered VAT vendor and trades only with registered VAT vendors. Business charges 15% on all sales. Okay, so that means the amounts are inclusive of VAT unless otherwise indicated. So everything is VAT inclusive. Okay, and they deposit any monies received on the same day. So this means your bank and your analysis of receipts would be the same. So that's why they don't require you to do that entry. Okay, then they tell you that Hollow Oak dealers do not expect to award any settlement discounts, and we do not expect to qualify for any discounts. The reason they tell you this, that in the event there are any, this would be dealt with under your general journal. We'll go to our general journal as an exception. And they tell you it's incidental of nature, so the impact will be minor. So it's not a very big impact on our financial information, so we do not have to go and adjust our entries. Okay, before I move on to the transactions, do you have any questions on what we've discussed so far? Do you guys have any questions on the beginning paragraph and the information that was provided? Do you guys have any questions for me so far, or can I continue? Okay, so some of the transactions that they have provided for us are the following. We sold inventory on credit to Nandi traders. Now, if we sell something on credit, what journal will we take it to? If we sell something on credit, what journal will we post it to? You can just type in the chat function the respective journal entry you would capture it to. Okay, so Lena says the debtors journal, and that is correct. So when we buy something on credit, we will take it to our debtors journal. Okay, because we say credit sales goes to debtors journal. Okay, now let's see what information that they provide us. A credit invoice for 45,000 excluding that. Okay, so what did we say? The main column would be our debtors control should be inclusive of that. So how do we get from an exclusive amount to an inclusive amount? So how will I convert this 45,000 that is exclusive to an inclusive amount? You can just type your formula in the chat function. Okay, so Lino says we take the amount and we multiply it with 1,15. Okay, alternatively, you could have also multiplied it with 115 and divided by 100. Okay, so that is correct, Lino. So let's go capture this in our debtors journal. Okay, I'm just going to stop sharing this and then share the Excel file. Okay, so you should see the Excel file on your screens. Okay, so the first entry we said, we sold inventory on credit to Nandi traders on the 1st. So what we have to enter here is our date would be the 1st. It would be Nandi Traders. Okay, you'll see there's no document column because of the fact that that information was not required. So this is actually blacked out. Okay, so we say debtors control, we have to multiply with 1.15 or 115 over 100 to work out the debtors control. Now, that means the sales amount, which is our VAT exclusive amount, would be the 45,000, and the output VAT that we would raise is the 45,000 times 15%. Okay, now how do we calculate the cost of sales that we need to complete in there? How do we calculate the cost of sales? Okay, so I'm going to ask the question again. How do we calculate the cost of sales? If our sales was 45,000, what is the cost of sales that we have to enter in our debtors journal? Okay, so Lino says it's 45,000 times 100 over 120, and that is correct, Lino. So because of the fact that we said our markup is 20% on the cost, our sales amount represents 120, and we want to know what the cost is, which is 100%. So to work out our cost of sales, we take the 45,000 times 100 over 120. Okay, so I'm going to share the PDF again. Okay, so let's look at the PDF. So on the PDF should be up on your screens. Okay. So on the 3rd, we received business rent from G. Howard for 6,540. Okay, under what journal will we capture this transaction? Under what journal will you capture the rent we received from G. Howard? Okay, so Lino says under the cash book receipts, and that is absolutely correct because it is physical money that we have received. Okay, so it's cash we received would go into our cash book receipt journal. Okay, that amount that we received, is it inclusive or exclusive of VAT? So that's 6,540. Is it inclusive or exclusive of VAT? Okay, that's correct, Lino. So it's inclusive of VAT. Okay, so I'm going to share the Excel and then we're going to go capture it under the correct journal. Okay, so on the Excel, we said it goes to, okay, you guys can see the Excel file. Okay, excellent. Okay, so we said it's going to the cash book receipts column. So it would be G. Howard. They paid it on the 3rd, so the date is the 3rd, and the details is G. Howard. So that amount was inclusive. We said the bank column is a VAT inclusive column. Okay. Now, where do we take the VAT portion that we have to take out of it? To which account or column do we take the VAT? To which column do we take the VAT component that is included in that 650? That's correct, to the output VAT. And what is the other account that we will credit? That we will credit as well. So what do we physically receive? So what does the money that we received represent? What was it for? Rent income. So that would be captured under our sundry income because we don't have a rent income account. So we would capture the rent income, and that's the VAT exclusive amount. Will we capture anything under cost of sales? Yes or no? Okay, no, that's correct. So we only capture something under cost of sales if we sell our inventory, not if we receive any other money. Okay, so let's move on to the next transaction. Okay, so we've got a weekly cash sale of inventory for 258,000. Nandi returned unwanted goods worth 3,200, excluding VAT, on the 1st of March. Okay, so the goods they purchased on the 1st, they returned some of that back to the supplier. Okay, so on the 8th, there's 2 entries. We've got a weekly cash sales, which is cash that we receive, which would also go to our cash book receipts. Okay, so that's a cash transaction. The Nandi that's returning unwanted goods, under which journal entry will you capture that information? Okay, that is absolutely correct, Lino. So we would capture that under the debtors allowance journal because it relates to the credit sales we previously recorded in the debtors journal. Okay, so we are going to reverse that initial entry and go put it in the debtors allowance journal. But what was very important to note here is that this amount is excluding VAT. So we will have to include the VAT when we capture the debtors control account. Just going to read the last transaction and then we'll move over to the Excel file. The owner took the inventory for their own use for a cost of 15,400. When an owner takes something for their own use, it is called drawings. In which journal do we capture this information? And what journal will you capture the drawings? So when an owner takes inventory for their own personal use. Okay, in the general journal, that's correct. Okay, because they do not indicate whether it's inclusive or exclusive. Based on the prior information in the beginning, would that amount be inclusive of VAT or exclusive of VAT? What do you guys think? It would be inclusive, that's correct, because they said everything is inclusive unless stated otherwise. So this is inclusive of VAT. Okay, so let's capture these three transactions then on our Excel file. Just going to share the Excel file again. Okay, so the first transaction we have is the weekly cash sales of inventory. Okay, so the weekly cash sales, we said going to the cash book receipts. Okay, so when we sell something on cash, our information will be cash sales or cash. Okay, we said the amount is 258,000, so that's the amount inclusive of VAT. Now, what we have to do is we have to go work out the output VAT and the sales that relates to that sale. Okay, so the output VAT is the 258 times 15 over 115, whereas the sales is the VAT exclusive amount, which is the 258,000 times 100 over 115. Okay, what other step do we still need to account for this specific sale? What do we still need to do in our cash book receipts before we have finished this transaction? Yes, we have to go calculate the cost of sales. Okay, so how would you work out the cost of sales for this amount? Okay, so I'm just going to repeat it. How will you work out the cost of sales? Okay, so you take the sales value of 224,348 and you multiply it over 100 over 120. Yes, that is absolutely correct, Lino. So our cost of sales, we work out by taking the 224, the sales amount, 348, and we multiply it over 100, the cost that I want, over the 120 is the sales amount that I have. Okay, then also on the 8th, we've got Nandi Traders returned unwanted goods to the value of 3,200, which was excluding that. So we said that is on the DAJ. Okay, so let's go to the DAJ then. So on the 3rd, we returned stuff to Nandi Traders. Okay, so the 3,200 is the amount that was given to us. And then we work out the input VAT by multiplying it with 15%. And then the debtor control amount is the VAT inclusive amount. So you multiply it with 1,15, or you just add the VAT component. Okay, how do we work out the cost of sales of the goods that we have returned? Okay, so that's correct, Dino. So we take the sales amount, the 3,200, we multiply it with 100 over 120 to work out the cost of sales amount. Okay, and that gives us an amount of 2,667 Rand. Okay, and then on the 15th, the owner took inventory for their own use for 15,400. So we said that amount would go to the general journal. Now, if we look at the journals they asked us for, we only had the debtors journal, debtors allowance journal, cash book receipts, and then they ask us for the general journal, general ledger account. So that one we will have to park and then go fill it in under our account where it will affect it, as they did not ask for the general journal. Okay, so let's share the question again. Okay, so on the 27th, we sold inventory on credit to our Latebe for 76,430. So because we sold it on credit, this would go to your debtors journal. Okay? This amount is the VAT inclusive amount. Then on the 27th, Nandi's traders paid 27,800 towards her standing account. So we are settling our creditors account. However, if we paid it towards an outstanding account, we would capture this in our cash book payments account because it's a payment that we've made. Now, because of the fact that they did not ask for the cash book payments, it will potentially affect one of the sales or cost of sales accounts, depending on the information. Okay, and then our Latebe had been declared insolvent. Oh, Nandi Traders is our data, sorry. It's our data, settling the data's account. So this goes to our cash book receipts. It's not our creditor. Okay, so that goes to our cash book receipts. Our Latebe has been declared insolvent. We received 40 cents in the rand. So that means 40 cents would go to the cash book receipts. And 60% would go to your general journal as a write-off. Okay, so the balance will need to be written off. So this is the write-off that goes to your general journal. Okay, so let's go fill in the remaining parts of the Excel file. Okay, so on the 23rd, we sold inventory on credit to our Latebe. So we said credit would go to debtors journal. So we would capture that information exactly the same as we would have done Nandi traders. So they've given us the 76,430, and then we would work out the output VAT, and then the sales would be the remaining amount. And then we have to calculate the cost of sales, which is the sales value times 100 over 120. Okay, and because we can see these are the last ones, I'm just going to total the sales and the cost of sales column while we're busy with it. So our total sales was 111,461, and our cost of sales was 92,884. And the debtors allowance was 3,200 and 2,667. Okay, then on the 27th, Nandi traders paid 27,800. So on the 27th, we received money from Nandi traders. Just going to move this down one. Okay, and then on the 30th, we said Arlatebe paid 40% of their outstanding account. Okay, so what we'll have to work out is what is their outstanding account. Okay, and how you work it out, if you take the information, we go look at what they've purchased. So they've purchased 76,450. Okay. Top. And they haven't returned anything, so you take that and you multiply it with 40%. Should give you the 30,575. So let's quickly see if that's the formula I've got. Yes. Okay. And then that goes off to debtors control, and then the difference would go to your general journal. Okay, so then we add up the sales column for this, and the cost of sales column is the 186. Okay, so that is the journals. So I think let's take a quick 10-minute break, and then we'll do the general ledger accounts and then finish up the question.